the topic obviously is sort of mega tech monopoly structure and what's legally permissible, basically, in terms of assembly of digital assets and audiences and data and whatever. And I think some of the more famous, like the original version of this was the Microsoft source code 90s DOJ thing. And also, I guess maybe before that, the regional Bell operating companies, the breakup of AT&T and the creation of Verizon and SPC Global and Bell South and all this. So we had to break up a big telephone, and then you had a shot at the title at Microsoft in the 90s, and now you find yourself with the Apple App Store, questionable. You find yourself with this alphabet conglomerate with God knows what sort of cross-wiring, back-end integrated super data, cookie loading, surveillance, listening, madness. They're working back over there. Who knows? It ain't pretty, I'll tell you that. And then obviously you have Facebook, which is sort of the most, I think, modernly or contemporarily sort of obvious, where it's like, okay, well, WhatsApp plus Instagram plus Facebook, like maybe we just make those three separate things instead of one thing. Maybe we take the App Store away from Apple, or apparently we take Google Chrome, the UI portal interface, away from the selling of AdWords and all these things. I mean, it's obviously a rational discussion. Can we start there? It's a rational point of discussion. Amazon probably has some version of this with its search things or whatever. True, rational to discuss tech, mega, monopoly, data harvesting, surveillance, cookie laying madness.
I think it's a rational argument to talk about the dominance of Google Chrome, which I would agree with some of the reasons for bringing this argument forward is that Google Chrome, the dominance that they've exhibited over the past 2 decades, it's not as organic as you would think, and there's a lot of stuff that happened to get them to this point that is, there may be a lot of anti-competitive things that aren't fair at all, that helped Google, that aided Google to achieve this level of control and dominance and things like that, and they may not have played fair all along. The question is the risk. I think the real question comes down to, and this is where I was hoping, we'd go today, is the risk of breaking up Google and Meta, Google more so even, greater than the rewards that we're going to kind of reap by keeping them as one entity.
I mean, one could argue that the creation of 7 regional Bell operating companies was one of the most prosperity-generating actions ever taken by a government, and turned the cost of long-distance phone calling, where you're like, oh, it's $3 a minute, Sam, to call San Francisco, because they charge for phone communication based on the mileage of distance between the telephones, as opposed to the elimination of distance as a relevant factor in pricing. And 7 piles of money instead of 1 pile of money, and 7 management teams, and all these things. And if I stand up an independent Chrome company and an independent WhatsApp and an independent Instagram, and then also keep a Facebook and a Google, and stand up to the world an App Store company, and you got to keep blathering on that you create 10 nodes of economic dynamism instead of one choking boardroom gluttonous on money.
That's very fair. And the other argument is, well, if you do that, do you basically cut innovation? Do you cut innovation off at the knees by doing that? Number one. Do you basically hand the keys over to China? Number two. if you don't hand them over to China, are you handing them over to somebody else that's going to be
Somebody else
just
is going to run a consolidated, hyper-integrated data harvesting super machine.
That's right, like an OpenAI who's
right. The network is the asset. It's not the same as the regional operating companies, because the integrated network is a different economic animal than the sum is greater than the parts more than ever because of AI and data and blah blah blah.
Yeah, so you have OpenAI, campaigning for Google Chrome right now, which would piss me off too if I was Google. And then the last piece to it is, what does that mean to the world of corporate action with respect to big companies with lots of money? Does that change all the dynamics? And instead of going out and buying another company with knowing that the long-term risk is being divested of that company, does it just mean it changes the game to being, just a dividend game and not a growth game anymore? So I have to think that those are the questions in front of us today.
So I think but we both can agree it's a super interesting topic of discussion.
Yes.
Start there, and I would concede that obviously everything we just discussed has merit. Can I tell a little story about a remarkable experience where I was like Forrest Gump. I stepped directly into the middle of the Bill Gates, Microsoft, DOJ antitrust negotiation.
Sure.
Inadvertently. Have I ever told you this story?
I don't think so.
So this is in the late 90s when Microsoft and the Department of Justice Department of Justice was aggressive in headline seeking and legal action. Microsoft is a monopoly. I would say more aggressive than even they are with Google or Meta or Apple at this point. I don't know who the boss was over there at the time, but they were real hopped up. And Bill Gates granted, I was the wire service reporter for Bloomberg, and I did an interview with him in San Francisco. It was like some big tech event. The interview was 20 minutes on a recorded, not live. And at the end of the 20 minutes, I was of the belief that I developed some mild degree of rapport with this man temporarily, as a reporter might. And as we stood up at the end of the interview and we were taking off our microphones, I said to him in a very casual way, obviously, if the Department of Justice was willing to call off the investigation, if you simply open the source code, this is like when Linux was first coming out, the whole thing was a closed source code, it would be like the Google Chrome, it was like the leverage point or whatever. So obviously you open the source code if they would go away. And Gates says to me, of course, because it was like saying to Scott Bessent, like, you're obviously going to make a deal with China. You're not going to do 150. Like, we don't know what the future is. It may not be what it was, but it's not going to be what it is. Like, you're going to make a deal. I say to Gates, you make a deal. He says, of course. I'm at the time, I'm working wire service reporter at Bloomberg. I walk out of the interview and I call my editor in New York and I say, I just interviewed the boss at Microsoft, and he just told me that if the DOJ was willing to call off the investigation, he would open the source code. Headlines on the Bloomberg terminal. Gates, Microsoft chairman open to new resolution. And they put your name and your phone number. When you would send headlines, like they would be like, so it would say the headline. This is like the era of the StarTAC, I'm like in San Francisco, late 90s on my StarTAC. Headline goes, my name and number. My phone goes from like not very active to extraordinarily active. All the ARBs in New York, because the stock goes from, let's say, being whatever it was, like up 5 to down 20. It's probably the more I've ever moved any stock in my life, like midday madness. All the ARBs, my phone's ringing. Who are you? What is this? Is this real? Are you is this, a joke? The publicist for Microsoft, apoplectic.
Yeah, you're in trouble.
Apoplectic. General counsel of Microsoft ignores me, calls not the editor-in-chief at Bloomberg, calls Michael Bloomberg's general counsel for Bloomberg LP, for the parent. So it goes, I get a general, and then my phone rings, DOJ. He says he's open to negotiate. Who said this? What?
So what happened?
So Bloomberg held their ground. They said, because we reported the story as what happened. So I didn't say Microsoft announces they're open to negotiate. I said I was interviewing the chairman of Microsoft and asked him if the DOJ would drop their charges or would drop the investigation. Would you open the source code? And he responded, quote, "Of course I would." So I just wrote it in the article as what it was. And so they hired a Park Avenue lawyer at Bloomberg, a First Amendment lawyer, and told everybody to buzz off. And they stood by the story. But anyway, the point is these situations can create quite a mess. Like, you know, if the headline goes that Google Chrome is being spun or is open to spin, you know. So that's just an anecdote because it's a fun story of chaos.
I thought Gates was going to call you up.
No. He disappears, right? It's lawyers and publicists, and then it's traders, people with money that are irate or delighted, or some have some emotional relationship with whatever's happening.
Yeah. Okay.
And then government people. The difference, I think, the most important thing of everything that you said is that the risk in doing the surgery, you want to call it that, is that the asset is the mega integrated silo of information, and that separating the parts doesn't create 10 parts of the same thing. It kills them. If you take parts of a person apart, you don't keep a person. You don't have no person and a bunch of worthless parts. And so that's the question you need to answer, because obviously somebody, OpenAI, China, is going to use the mega tower of data. I don't know how to answer that question.
Yeah, no, I don't know. But I've been researching the topic, and and I brought this up the other day, even before I researched it, and felt like if you come after Google at the speed at which the Chinese tech companies can move today, they're much faster than us. They innovate faster. They deliver to the street faster. And I feel like we will be very much disadvantaged, more so than we are now. But
that's the big debate, is maybe because all the decisions go through the same small number of boardrooms at Amazon or Meta, or that I could make an argument the other way, that we'd be more fat. You could see the other side of it.
Yeah, but I also wonder, like Google, what do they buy? 200 companies a year. Meta buys 50 or 100. Apple buys 50 or 100 companies a year. These guys are the biggest players out there in different kinds of corporate action and M&A deals. And you don't want that stuff to go away. That's what drives the whole system. I mean, that's that's pretty much the power behind the most of the M&A stuff that happens in the US. Is the big seven drive most of the activity. So I don't know. I just think about it from that side. And also, I wouldn't want to give OpenAI an advantage over anybody else. I don't think they've earned it either. I think the real answer here is that I think the easy answer is that you force Google to play by the rules.
But elaborate on that, because there's specific areas where if you want to buy a keyword in search, which is a multi-bajillion-dollar bracket that exists in this world.
The argument is
Google is the only seller of keywords, and they price them capriciously and brutally depending on the word and the timing.
Yeah, that's the whole thing with Google. They're anti-competitive. They've essentially either bought out or destroyed all their competition. So they have pretty much a monopoly on search. And even companies like Microsoft that tried to create search through things like Bing and all that other stuff, everybody's failed. They've effectively.
So if you want to separate that, so then the whole philosophical thing, sorry to interrupt you, is separate search from services, right? I mean, that's the philosophical debate, I guess.
Yeah. Somehow you force them into line, and so that they remain competitive, but they somehow somehow be fair. I mean, I think that's the key. The easiest answer to mega tech monopoly is break them up, because in the process of breaking them up, you're hurting them financially, and you're kind of destroying the, you're like a boxer taking out the head, and then the body will fall. And that's what happens. I'm not so sure that's long-term good for growth or the economy or for deal making, stuff like that. I think the real answer is you box them in from either a regulatory side or a fee side.
And so how do you do that? Like, because basically they have a stranglehold on a narrow piece.
Yeah, you have to legislate
it.
It has to be regulatory. You have to legislate it. Or you have to force them.
Monopoly. You're like basically like the same way they have a monopoly exception for the NFL or for insurance companies.
Yeah. You basically require them to play nice or die is essentially it.
Like you deem them legally a monopoly with a waiver, as long as they're compliant with some standard of price of price protection or absence of price abuse or access.
Yeah, that's essentially it. And then that way you preserve the integrity of the ecosystem, but you still give everybody else a chance and you level the playing field. Yeah, I find that dealing with any of those companies, any tech company that has, that's considered a big box monopoly or a big tech monopoly, it's virtually impossible to negotiate with. It's their way or the highway. There's no other choice.
And so if the government steps in and deems them monopolies with this tech waiver, let's call it, that is whatever it is, it's still bad for their growth. It means there's going to be price compression. Right, they can't exploit every nickel based on the data to the keyword stock trading on the right day, on the whatever the day that somebody's buying, or whatever floral delivery, whatever they're selling. Yeah, I mean, I'm just saying it's still the point is just from a financial standpoint, it would impair the valuations, even to be deemed a monopoly and have a regulatory price regime.
It will hurt a little bit, but it will hurt a lot less than the alternative, which is the breakup. I don't know. Like, listen, I don't know, but after reading all this stuff,
doesn't that just jam the multiple? It turns them into a utility.
And after
the worst case,
I've been reading a ton of stuff on all these cases, and everything seems so vague and so sketchy. I don't know. Mm-hmm. Like it just.
Well, not only that, but like if you listen to the politicians, their ideas are dumb.
Yeah.
Like even if they're right, they're saying this is a monopoly. It's price gouging. It's access denial. You can't get an app, whatever. Like we're all like, yes, yeah. But then the solution is just horrifying because you're like, I don't think they know what they're doing. Like they don't understand the data integration that's behind these things. Or China or AI, they don't get it.
Well, if you look at the numbers support the argument that, when you look at the big 7 or 10 biggest companies in the world, the numbers support the argument for a monopolistic breakup. I mean, it's absolutely
they're so big.
It's so big. It's so crazy. Like, we're talking hundreds of billions of dollars of revenue. I mean, we're talking about numbers that are just not even imaginable. Like, it's like, so.
It's a different world from all other business.
Yeah. So there's so little. And when you start to read the stories on this, we can't do this because OpenAI will buy us. We can't do this because China will have an advantage. These are so vague. Everything's so
that's
vague.
The best defense that the general counsel can muster, or the outside counsel.
Everything is so vague. Everything is so broad. I think the real answer, and they've tried the fine route, and that doesn't, they don't care. They just pay them.
Who cares?
So I think the real answer is you box everything in, and you force everybody to play fair.
I don't disagree with you. I think it's super. I mean, it's like getting somebody. You don't take somebody's heart out if they've got heart disease. You change their diet and like their sleep and like make them like It's like you need to like put like the mega techs on like a health plan in
Yeah,
terms of the health of the business ecosystem.
yeah, because you
In the
don't want
process,
to.
though, doesn't that become they become less valuable? That's what I'm getting at.
Maybe, but it's at least you don't disrupt the markets. At least you don't you don't hurt the overall market. You saw what happened the last couple of weeks when the overall market goes down. It takes everything down. So you don't want to do that. So I think that this is the better alternative. When I read these cases, I'm thinking to myself, the only people that benefit from a Google um, from this Google trial on this on the Google Chrome, the only people that win are the lawyers. I don't think that I don't win as a consumer. Google can't win because they're going to lose, whatever, it's billions. I mean, nobody wins.
No, That who wins. I mean, I don't know. The issue is all the businesses from Porsche and Walmart and Volkswagen to General Mills and Tasty Trade and anybody else. I don't know about Tasty Trade, but all these companies that bid Expedia, Booking, that pay money to buy keywords, and Google runs it as a pricing monopoly that massively increases the cost of sales and marketing in a way that's an abuse. Or same issue with the VIG on apps would be the other obvious one. I'm saying that is the big loser is market access for small, medium, and large businesses.
Okay. I mean, in my
Which would be a code for innovation, I guess.
in my universe, I would rather see it be a regulatory thing because I think it benefits us. It benefits us if it's regulatory and it's not some other third party, it's not some breakup and then because I don't think we get to control the leverage in that case either. So it's all about leverage for me. Like, where do we get the most leverage? And I think we get the most leverage, from a
with a regulatory intervention, but preserve the integration.
That's right. That's right. I think
anything happens. I don't think because they never did anything with Microsoft, if I remember correctly, after all that years of drama and lawyering.
I think it's going to be almost impossible to take Chrome away from Google and to take YouTube away from
WhatsApp, Instagram away from Facebook.
Yeah, Instagram away from Facebook. Yeah, exactly. I think it's
App Store from Apple.
It's going to be really hard. It's going to be really hard with doing nothing with TikTok and everything. It's going to be really hard. I don't understand it. I don't get the political benefit to it either. So
at the same time, wealth inequality is at an all-time high. Wealth concentrations at an all-time high.
Yeah.
That wealth is all concentrated in the tech monopoly ecosystem directly and indirectly.
Yeah.
And it's not just an economic challenge, it's a cultural challenge. Not to mention, no one likes living under the super regime of hyper surveillance where everything you think ends up on your iPhone because you thought it listens to your brain or something. It's crazy.
Yeah, that doesn't bother me.
The listening devices doesn't bother you?
No, it doesn't bother me.
The super surveillance, the super targeting?
No, doesn't bother me. Doesn't bother me at all. All right. Well, anyway, I wanted to cover that topic because I thought that would be interesting that'd be just interesting to, we're reading all about it. It's on the front of the headlines, but I'm not really sure how it.
My issue is I would argue that the network here's my argument. The network is the utility.
Yeah.
A well-integrated network is the most valuable thing in the world, for anything. But the issue is not to allow one group of shareholders or one management team to reap all the economic benefits of being the first one to manage and control the network well. Like, there's an economic benefit for doing that, obviously, but that the network itself is actually a utility. It's a public asset. It's not a privately held, like the Meta network, the Google network, whatever it is, that basically there's actually each contributor, each identity, every individual has a microscopic piece of equity in the value of that network.
Yeah, I'm not going to argue that. I like that
And that the
story.
inefficiency in the structure is that all that microscopic equity of all the network micro participants has been raked in by Mark and Jeff and whoever as the ostensible owners of the network, which is a false corporate structure. So I would say preserve the network, but redistribute ownership to all the network participants. Instead of do whatever you want. But now everybody, half the equity resides with everybody on the network, and then the other half with investors and management or whatever. But half. And then I break up the monopoly by stripping half the ownership away from the Wall Street and the management. Preserve the network. There still has plenty of dough up top. But now I'm pressing the value of the network back into all the users. Anyway, that's my alternative. That's my fourth way. Now the network's intact, but I've transferred. Instead of the regulatory, my concern with regulatory is that it's just open to corruption. Now it's like, oh, well, we did a waiver for the keyword tasty trade because Radigan wants to make Tom crazy. So I'm in there. I'm like, put away, make tasty trade online. I'm going to buy tasty trade for a penny and put a picture of Tom with his, whatever in his fishing trip. He's not even working anymore. Look at him. You call Google. You're like, what are you doing selling tasty trade to my competitor? Anyway, I mean, that's sort of that's the interesting of the modern way.